You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for a little program I like to call around these parts, the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And if you're just listening right now, you just subscribed to the option block. First off, welcome. We like you guys. We don't shoo any of you out there. But secondly, head on over to discover the full fruits of our garden, that is the Options Insider Radio Network. The easiest place to do that, of course. Subscribe to the full network wherever you're listening to this. Just type that name in and you can get the full kit and caboodle. That's 15 shows. There's a lot of stuff coming to your ear holes that's options related, but I think you can handle it. If you can handle this show, you can definitely handle the rest of the network. Of course, you can always find it at the mothership as well, theoptionsinsider.com, or via our mobile app, available for all the major platforms. And of course, you can always, a little bonus for you hardcores out there who want to join us live. You want to hear how the sausage is actually made, live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via the old Mixlers, MIXLR. If you follow us on any of the social medias or on our website or anywhere else in the newsletter, you've seen that link. Grab it, bookmark it, save it. If you want to, you can follow us on Mixler, and a bunch of you do, and then you get notified the instant we go live, and then you too can join the live party that is the option block. And it wouldn't be a party if it was just me. Well, I could still hold down a good party. It'd be fun, but it'd be more fun if I had some cohorts, some compatriots to share the bubbly with. And so let's see who we got on the other end of the horn, who's joining us on the old all-star panel today. Let's go out first to that land of delicious lemonade, and also not a bad hero, known as Skippy's, also known as St. Charles, Illinois. We're joined by the man himself, good old Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. How are you advising me today, sir?
It's just a total eclipse of my heart today.
I was just talking to someone about that show. I was like, how many about that song? How many downloads is that stupid song getting today versus like it's 8 million% more than it was yesterday, I guarantee, and it will be tomorrow. But today, that is the king of songs.
It is.
Because literally there are no other songs with eclipse in the title, so it kind of wins by default. So there she was. She was kind of prescient, 3 to 4 decades ahead of her time. And also joining us not from Eclipse Central, unfortunately. None of us really are that. Chicago, a wee bit north of that path of totality, as they like to call it. But we still got a good glimpse of it here outside of the old studios. We're right here on the Chicago River, so it was a nice little view. We were about, I think, 87% covered, so it was still a pretty cool view. So we got to check that out today. I think it was also pretty obscured out there in the far, far, far hinterlands known as Riverside, where we are joined by good old Mark Sebastian, a.k.a. the Greasy Meatball from OptionPit.com. Mr. Meatball, welcome. Glad you can join us from so far out there in the suburbs.
Oh, I know, out in the boonies here in Riverside. Yeah, it was great. We got a real view of, we had clouds, and then right when the eclipse was hitting its peak, the clouds dissipated. And so I got to view everything. I was looking, and every time there was an eclipse in the last 100 years, I did some research. The market performance after eclipse was completely unrelated to the eclipse event itself. I know.
I was just going to say, are you going to draw some dubious correlations? Or?
Zero correlation.
You're a total geek for doing that.
Zero correlation. So
I like that.
There you have it, folks.
I like that. Good stuff. Well said, sir. Let's keep on rolling now. Time to break it down. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block. Like the man said, this is the portion of the show. Well, we would do some trading if it was still in the trading hours. Unfortunately, it's after the bell. But this is where we break down the day that was and what caught our eye in today's markets. I think most of the market was kind of obsessed out there watching this big event. Wasn't really a hell of a lot lighting up the collective tapes out there today. Even though, at the end of the day, looking at unched, or close to it, kind of belies. There was a little bit of a range out there in the S&P today. It got down about 24. I think 24.17 was actually the low out there in the S today, closing right around 24.30. So it had a little bit of a range to it. But at the end of the day, everything pretty much finishing unched right around there. Qs, S&P, Dow, all pretty much in that slightly unched up or down range. And of course, the old VIX cash, if it's not seeing super crazy moves in one direction or the other, it's going to take a little bit of a breather, and it kind of did exactly that today, giving off over a handle, almost a handle and a quarter or so, hovering right around a little bit north of that 13 handle right now, right around 13.10 or so, which, as I recall, is not looking too bad for my vol views prediction. But as we know, those things could change minute by minute. I was looking pretty good when the show started last week, and by the end of the show, the VIX giveth and the VIX taketh away. So we got a whole week to go. All sorts of fire and fury can happen between now and then, so can't count our chickens anytime yet. That said, Mr. Meatball, we're talking VIX, so we'll start there. What caught your eye in today's market activity and this, shall we say, this day of exhalation for the VIX?
I mean, it's kind of a weird one. I would have thought with Bannon quitting that we would be up 20 points, and we're not. I would have thought that, with us not being up on ending the day down on Friday, that we would see a lot of follow through today. The market, just does not trust what it's looking at, and the fade the spike. I mean, it's not working the way it used to. I think a lot of people are real wary to come in and hammer vol. So I think the fact that VIX is 13, and we've had 2 days in a row of about 3 points of movement, I think it shows you how nervous markets are for the president, and how this shakeup is really a problem, and how much confidence has been lost. We also have, some talk of nothing like a debt ceiling to spook markets, and of course they want a clean lift, but there's also going to be a big fight with the wall. So I mean, we may see some lunacy yet again. Markets don't like what they're looking at. That's plain and simple.
I don't know what you're referring to, sir. Why would markets be potentially at all spooked and have some concerns on their mind? What could possibly be causing them to have such concern right now? And it's not like a tweet can come out of left field and completely change all things. That's not the environment we're in right now. So I really don't know what you're referring to. I think you should be a little less opaque with your references, sir. I think our friend Ophir is listening right now. We're talking about low VIX. He tweeted and saying, "Remember when VIX was 9.7%? Man, that was fun." So I guess to each their own. When VIX was low, everyone I saw was wringing their hands saying, "When are we going to get some juice? When are we going to get some juice?" Now at least Ophir is saying, "When are we going to get back to those no juice days?" So I guess it's to each their own. Maybe he's being facetious. It's hard to tell in the short brevity of a tweet. That said, Mr. Uncle Mike, sir, a lot popping off in your realm. We'll get to some of that in a little bit, but first off, what was catching your eye today, sir? I know Apple off a whole 0.1% must have been very alarming for you.
It was. Yeah, I would say these last 2 weeks, we could write like Billy Joel, "We Didn't Start the Fire" song again, just with all the events that have been happening. North Korea, South Korea, Bannon out. Everything that's been happening, it's been so news heavy these last couple of weeks. It's been insanity. In terms of what happened today, well, not a lot did, but what I do think that we should be, I know for sure that when Trump talks about Afghanistan tonight, when he addresses the country, I am definitely going to have my eyeballs glued to my screen watching the futures at that point in time, because with what's been moving the market lately has been things that Trump has been doing and saying, and the fact that he's addressing the nation on what's going on in Afghanistan tonight. I think I do see some type of market reaction in some way, shape, or form tonight. I'll give you my 50% guarantee that it'll go up or down, of course. But with that being said, I think it just kind of like to add to what Mark said, it feels like the market's just waiting for the next tweet to come out.
Yeah, there's there feels like there's a shoe to drop. I don't know what it is, because we've been news driven on non-news, right? Nothing happened. Nothing really changed in North Korea other than they chatted each other, and nothing. And last week was again news created out of nothingness, and I'm not sure why markets are doing what they're doing, but it feels like there's a shoe to drop. I don't know what it is, but it really does feel like it. And I don't know, maybe I'm wrong, but I haven't seen markets be able to hold up a VIX above 13 for this long. I don't know. They feel like they're anticipating some sort of craziness.
Speaking of craziness, it's a quiet news day, so leave it to our friend over there, Mr. PR press release, Mr. Musk over there, to try to gin up a slow news day. He's not talking Tesla. He's not even talking SpaceX today. No, instead, apparently, he was urging, back on his anti-AI tip, he was urging the UN to ban artificial intelligence. So there we go. He's never a man who could not to take advantage of a slow news cycle. So I don't know, Mr. Meeple. I almost called you Rock last. Mr. Meeple, are you terrified? Yeah. Are you as terrified of AI coming to get you and your children as apparently Mr. Musk is?
Well, I think that you can make a strong case that robotics, using robotics in war autonomously is then it just turns into a video game. And, that makes some sense when there's not, when there's no, one of the, there's a hard way to kind of describe this, but one of the reasons why war works is because war is so awful. If you turn war into my side doesn't take casualties because I have robots and your side does, it stops being such a problem for some countries. I think one of the issues you have with banning it worldwide is who's to stop somebody from doing something with it anyway. It is a problem. I don't know, but I am not I agree that using AI to actually push the shooting button is probably a mistake.
Well, I think you need. That was a more cogent answer than I expected. I was just joking. I was tossing you a joke link, but you ran with it in an interesting direction, sir, which was more heartfelt than perhaps I thought. Clearly, the AI issue of top of mind to you out there. But yeah, it's a quiet news day, and everyone's kind of waiting for that next shoe to drop. Earnings kind of in a little bit of the back burner. There are still some names popping off, but not quite as many big names. Most of those in the rearview mirror. Most of them seemingly, it's earnings season, seem to be a little bit better than a lot of people expected. People were certainly pricing in a lot of juice coming into this cycle. We didn't get that many outperformances maybe to merit that amount of juice. But still, it was an interesting quarter nonetheless. Speaking of interesting, this is the part of the show where we start breaking down some of the interesting paper that came across our scans today. So let's get right to it in time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we take a look at the weird, the wild, the wondrous, the woolly, the whimsical paper that was lighting up. How many W adjectives can I come up with off the top of my head? Let's see. But we'll look at a bunch of the names that were catching our eye here in the old market activity. Speaking of which, we were joking about Tesla before, or Elon Musk, aka Tesla before, but it seems like the market not liking his talk of killer robots because they slammed Tesla a nice 3% today. I'm sure it wasn't completely related, but whenever he makes a headline, the stock's going to move one way or the other. Clearly today, it was a little bit to the downside, off about 3%, nearly 10 handles out there. Still trading at a comparatively lofty $337.86. But what catches our eye out there usually, and what you guys like to hit us up about a lot, so we kick off our odd block a lot with these days, certainly because they are odd, are these crazy Jan 50 puts. Again, these catastrophe puts, you guys have written in with all your ideas as to what they are. Elon Musk life insurance puts, hedging your Model S against bankruptcy puts, call them what you will. Still lighting it up today, 113 going up, 28,238 open. But Mark, I think what caught my eye last week, and we talked about it a little bit on the show last week, was the size that also was going up in the still seemingly outrageous strike of the Jan par, the Jan 100 puts. 1,500 of them traded last time we did the show on Thursday, which is crazy. And I happened to look at it today when we were putting together the numbers for these 50 puts, and there's a total of 13,556 open of those par puts. So maybe some of these 50s are perhaps legging into a bit of a ratio. We got 13,000 and change open on the pars. We got 28,000 and change open on the 50s. So, I mean, I don't know. These little trickles are obviously not that, but still, are you buying? Maybe there's some ratio action going on here, sir? Someone taking advantage of these 50s that have been, let's say, comparatively bid up to do a little bit of ratioing?
Yeah, that's exactly what they're doing, and that's what I would do if I was trying to set up some hedges. Because, when you have something, just a group that is slamming a bidding up or a strike regardless of cost, that is an excellent opportunity to turn it into a ratio and take advantage of the vol dispersion.
Yeah, it certainly seems like it. I mean, how many times have we advocated that here on this show? If someone causes a distortion, take advantage of it. And that could certainly be where that 1,500 lot came from last week. Either way, both of these strikes are far more active than any Jan 2019, many percent out of the money strike ever should be. So it certainly merits some interest. The Jan pars not lighting it up so much this week, but we shall keep an eye on those bad boys as well. Maybe add in those. Those are also one of the more sizable open interest options positions out there now in Tesla with, like I said, 13,556. That's one of the larger hot strikes out there, which is mind-boggling. If you had asked, and I do ask people a lot, what they think the number one position is, or number two or number five, those are never the answer. So very interesting stuff. Well, let's move on talking about puts and long-term concern. Those two things are echoed in our next name, our next victim here in the old odd block. This is good old Starbucks. I haven't talked about good old SBUX in a while. Ticker symbol, of course, SBUX. Closing today, actually bucking the trend, up about 0.5%, right around $53.15. We all know SBUX does some paper, does about 34, almost 35,000 contracts a day. I remember watching this quite a bit. This used to be out my old Intel pit back in the day. It's one of the other few names that really traded. There's a lot of garbage out there. Everyone was there primarily for Intel, and if you wanted some other things to trade, a little bit of good old SBUX would do it for you as well. It's also out in IBM, actually earlier when I started out. That's where I first started watching. But actually, I was in IBM. Rite Aid was in our pit, so I'm conflating the two there. Both of them, I think Starbucks is a little bit more active than Rite Aid, but we'll get into that another day. Good old today, though, doing a lot more than their ADV, doing about 200,000 contracts, about 10, almost 11 to 1 puts over calls, and that's where our attention was drawn. Similar theme here, Mark. We were talking about long-term ratio spreads, potentially in Tesla. This was just a straight-up long-term put spread. We got someone probably sitting on a lot of good old SBUX and deciding they want to hedge a bit, but not a ton. At least, not a ton in terms of, not a big meaty hedge. The stock closed, like I said, $53.15 today. They're not coming in and buying the 50 or 52 half puts. No, they're buying the Jan 35-40 put spread. And they did it for a wee bit of size to the tune of, well, it started off printing multiple blocks. We saw 37,000 and then 25,000 going up of those 35 puts. Both of those below the bid for 60 cents. A total of about 87,000 on that strike. And the same for the 40 puts, a bunch of multiple blocks trading at or around the offer, around $1.15 or so for a lot of those going up. So total on the day, 87,000 contracts going up on this put spread. Both of these strikes, the OI is pretty sizable, about 24 to 27,000 depending on the strike, but still nowhere near enough to cover this positioning. So it could be piling on. There is some decent amount of OI there. Maybe someone wants to put on a total of over 100,000 on this strike, or it could be just incidental that there is volume out there. Either way, though, this is an interesting strike to choose in terms of if this is indeed a straight up long term. Again, this is Jan 2019, not 2018. So about a year and a half out there. Loading up 87,000 times. Jan 2019, 35.40 put spread. Let's look at the chart and see how this looks. And we've seen SBUX over the past year dripped as low as about 50. Hasn't even broke the 50 handle. So this is a fairly relaxed, shall we say, hedge. This is someone who apparently is not too concerned about this thing really skipping that far down. And if it does, well, he's got 35.40 to back him up. He's not too concerned about giving up about $13 worth of whatever gains he's sitting on right now, which is perhaps an interesting choice. Mr. Meatball, we talked about Starbucks before. It's been a little while since it's been on our radar, but it tends to pop up every now and then. Has this one, it's done some paper. Has it come up in your chat room at all of late? And what say you about this pretty sizable, but also pretty tight, only a $5 put spread that far out in Starbucks?
Yeah, absolutely likely a hedge, and probably has to do something to do with basis and the person not wanting to spend too much on the costs. And yeah, this one pops up. They have, because Howard Schultz is a somewhat outspoken CEO. They're another headline risk blowback, type company. So. Really well-run company, but there is sometimes some headline risk with them. So I could see why someone would set this up. I'm wondering whether there was a stock tie with it based on the pricing, but I don't know if there was or not.
That kind of stuff, there usually is that kind of size. You usually see a little bit of stock going up without the dig in to see if they found any of that when they were filtering this stuff out. But either way, it is interesting choice for a hedge. So far out of the money, yet it's only $5. It's kind of an interesting choice for a hedge. I think you're right. It probably has a little bit to do with perhaps some basis adjustments, some other axes to grind out there as well. In addition to just these put spreads here. Moving on to another name. We actually talked about this on the last show, XLU. This is the Utilities SPDR ETF. Closing today, actually also up a little bit on the day, $54.70, up about nearly 0.5% on the day. This is the name that does about 30,000 contracts a day. Today have another Rock'em Sock'em day, up trading a total of about nearly 110,000 contracts, so over 3x their ADV. Of that, about a little over 6 to 1 puts over calls. If you remember last week, listeners, on Friday, we talked about paper really piling in aggressively to those SEP 57 calls. A total of over 81,000 going up on the day at or near the offer. Paper is just gobbling those up. As we speak right now, still 80,000 and change open on that strike. So that position is still open, but this name has not done. Not by a long shot in terms of big prints going up. At 10,000, it looks like it was set 53 calls going up today, which is kind of interesting. But also, what really caught our eye out here was a pretty sizable put spread. It was the DEES 50 March 51 put spread going up 40,000 times. So this name's seeing some interesting paper over them, certainly sizable over the past week or so. This one going up looks like paper hitting the bid or right near it on the DEES 50 puts for 54 cents, and then coming up and lifting some offers or very close to it on the March 51 puts, paying $1.28 for those. The March is opening, not much OI there. There's about 50-odd thousand contracts open on the DEES. So it is possible that they are rolling. It would be an odd choice to be rolling a DEES so far out of the money strike right now, but we've seen weirder things. It is the odd block after all. Yeah, total of 51,369 contracts open on that DEES 50 strike. And let's go, we looked at it last week. Let's look at it a little bit more today. Again, this name seems to be endlessly fascinating to someone or multiple people out there over the past week. This thing has dipped as low as about a little bit shy of 46, about 45 and change. That was back in November of last year. Other than that, over the past year, it's kind of been pretty much straight up from that nadir, hitting these recent highs here, right around $55. That seems to be the upper band of that range. And our friend here, if he is rolling, it's an interesting time to be rolling these DEES 50 puts. But I've seen weirder things. Mr. Meatball, what say you? First off, was this your roll out here in XLU? I know it's 40,000, a little bit small for you, but still. And then what do you think about this? You think it's rolling? You think it's just additive? It would be an odd time to be rolling your DEES 50 puts, but again, it is the odd block. We've seen weirder things, sir.
Yeah, it would be an odd time to roll that. Maybe they do want to adjust their delta or something like that. It could be just some tweaking. But so you never know. I mean, somebody could be closing a position, they could have been, or, change their underlying position. There's a lot of reasons why someone might be doing this specifically. But yeah, this is not, XLU is an interesting one because of all of its interest rate sensitivity. And we do have a Fed meeting coming up, and people really aren't sure what the September meeting is going to be like. And that could be a interesting piece for the time being.
Speaking of interesting pieces, we get a lot of interesting pieces of info and a lot of questions from you guys too. So it's kind of a bit of a slow news day. So we thought we'd give you guys a little bit extra time on the old show today. Let's dive right on into the Monday mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is, of course, a portion of the show where you guys take the reins and take us in all sorts of interesting directions. Sometimes, all interesting directions. All sorts of stuff you guys want to know about. Let's kick things off with paying off some of the questions we asked you guys last week. Starting off, we asked you guys last week, hey, let's take a break from the madness, such as it is out there, let's just talk the remainder of what we had for earnings. We said, hey, which of these four names are you guys looking the most forward to trading options on this past week? We gave you Cisco, Baba, Home Depot, or Walmart. And surprise, surprise, Baba winning pretty handily. 57% tie for 18% with Cisco and Home Depot, and only 7% choosing Walmart. So no love for the old king of retail out there. We'll still see. We also asked you, this is a little bit more challenging one. We asked you, which major index has experienced the largest percent change in 30-day, pretty much front month at the money volatility year to date. So not over any last week or last month, all of 2017 so far. And we asked you pretty much the four major indices. You said S&P 500, the Nasdaq, the Dow, or the Russell. Maybe Uncle Mike will start with you. I think you might have chosen Russell last week. Are you staying with that, or are you gonna flip your script?
That's my story. I'm sticking to it. I think the Russell's going to be the one.
But Mr. Meatball, what about you? Are you still going with Russell, or are you going elsewhere?
I'm gonna flip my script. I'm gonna say Nasdaq.
This is an interesting one, actually. We had to do a little bit of a calculating here, as you might expect. A lot of the data actually coming from our friends over there at Quick Strike. They have great data on all this stuff. You can break down the vol however you like it out there. And for a 30-day vol, we pulled it off. You can pull it off SPY, you can pull it SBUX. We chose to look at, the E-minis and the big S&Ps for a lot of these names, and the big index options for a lot of these. So yeah, percent change on the 30-day S&P year to date. This was as of last Friday when we cranked all these numbers. Is off 13.61%. Oh, by the way, our audience also chose Russell, 39%. Let's see here. The E-mini Nasdaq is off 14.02%. So E-mini Nasdaq would be in the lead there. And 30 days, all we want is 30-day here. E-mini S&P off 19.75% for the 30-day. So pretty aggressive there, getting a little bit bigger out there. And then we have, of course, we're looking for here. It's a table. Here we go. E-mini Dow, also interesting for 30-day, off 28.19%. Year to date. So Dow is actually a bit of the leader there, 28.19%. Now, the interesting one is the Russell. We didn't have pure data on that. So you can look at that a couple of different ways. You can look at IWM. You can look at an RVX. It kind of depends, all different ways for how you're looking at it. We have the Russell here at about a 4.7% change for the year, which is kind of interesting because the Russell, if you notice too, we talked about this on TWIFO last week, Russell net index for the year is actually unched, or almost are flat. Which is kind of interesting compared to most of the major other indices being off or up somewhere, 7 to 9, maybe a little more percent left, even after last week's sell-off. So I want to crank some more numbers out there on this before we declare a definitive winner. Our audience picking Russell, you guys picking Russell. I'm not sure. They may have cranked this using RVX. I want to check on this one again. But so far, this is actually looking like, and we'll throw all the different flavors of the product, listeners. So it could be E-mini, could be Big Dow. We'll lump them all together. So if there's one more than the other, we'll give it to that one. It looks like E-mini Dow, actually, with a 28% decrease this year, may be our leader. I'm going to check on these Russell numbers, though, before we declare an ultimate winner here. But yeah, Russell looks like it's moving at about 4.7%. I think it's a little higher than that. So we'll have to make sure that looks good. But still, interesting stuff going on here. We got more questions, people asking here about, we were talking about the Tesla catastrophe puts earlier, for profits. Wants to know, we were joking before about, well, maybe not really joking. We were saying it could be a ratio put spread percent. Instead, he says, what does that mean? Well, exactly what we were talking about before, Mr. For Profits. That means instead of just naked buying a lot of those puts, although certainly there is that paper there too. We've highlighted it every day, a couple of hundred going up every day. We did see some big blocks though last week of those Jan 100 puts going up. So in that case, it might be some case of someone buying the Jans and then selling a bunch of those SEP 50 puts, doing it on a ratio 1 buy 1 sell 2. That's typically how you would do it. That could be 1 by 1 too, but something like that. Those puts are so cheap. They have been bid up very aggressively. If you're going to come in, maybe you buy 1,500 like our friend did last week of the Jan 100s, and maybe you're going to sell 3,000 or more of the Jan 50 puts, and then again you're covered all the way down to 50, and then beyond it a little bit. Obviously, the break even is going to be lower than 50. If it goes to 0, you're still going to be hurting. You won't be hurting as much though as if you just blasted out those puts by themselves. So that's what we mean by a ratio, just usually buying one and selling 2 there. All right, here's an interesting one. I'd be curious to get your guys' thoughts on this. This is why, again, I love the listeners. They take us in all sorts of interesting directions. This comes from Privateer. And Privateer says, hi guys, love the show. I've recently been learning about an exciting strategy called writing call options with CFDs. CFDs, of course, listeners, are contracts for difference. He says, the claim by the teacher is that CFDs can leverage the return on premium selling by 10 times and reduce your break even significantly. I'm very invested in how this could apply in selling both legs, i.e. covered strangles or straddles. Can you discuss the upsides, downsides, and hedging strategies used in this scenario and how to mitigate risk, especially on the put leg? Yeah, you're concerned about that put leg, are you? This comes from, Privateer. Interesting stuff. We haven't really talked, I don't think ever, on this show, which is saying a lot. We have had 600 episodes about contracts for difference. If you're not familiar with these usually trade a lot OTC, or you can kind of contact your broker if you have a pretty sizable account, and they will put one of these together for you. It's kind of almost like a poor man's option in a lot of ways. Effectively, they're gonna give you the difference on whatever the underlying is that you're looking for, whenever set amount of time and ratio and price you set up with your broker. What's interesting, I did a little digging when this question came in, and to see what he's talking about with these efficiency savings. Obviously, stock with a lot of brokers is going to be 50% if you bought stock. At least some things I was reading saying a typical outlay on margin on a CFD is only 5%, which is pretty substantial in terms of difference. But I don't know, Mark, you must have talked about this in your chat room before. One of your hardcore chatties maybe asked about this. I'm always a little bit leery to recommend someone goes out there and shall we say, gins up an already levered instrument with another levered instrument. Have you looked at this scenario before, particularly premium writing against a CFD?
I've never really looked at these before. It sounds a lot like, a lot of the exotic products and structured products that trade out in Japan and in Korea and in Asia. And here's my first bone I want to pick with this guy is if you own the underlying and you sell a put and a call, how is that covered? No, that's not covered at all. The covered call is a cover. The put is just strapping it on. That's a Texas hedge. So that there's nothing covered about it. Now that being said, having the favorable margining and selling some sort of call over right, I think that could absolutely make some sense. The put, I get why you might want to sell that, but then all you're really doing is doing the CFD, selling a call, and selling a put. There's no real hedge in there, and why not? Why even deal with the CFD? Why not just sell the put too, or sell it as a condor? Why bother? But it's an interesting concept. I'm going to do a little digging on these.
Yeah, certainly margin-wise, I can see why this guy is into it. You're right. I like your terminology, strapping it on. It is not hedged on the downside. That's why, obviously, he's writing to us saying, how can I mitigate risk, particularly on that put leg? Yeah, that's where you're going to have the issue, obviously, because you're essentially doubling down on your position. I don't know, Uncle Mike, I think you're joining us from your mobile office today. I don't know if you ever come across any of your clients have ever asked you about CFDs, but I guess why I like the listener. They take us sometimes in interesting and unplanned directions. Do you have any thoughts on premium writing, in particular, selling not covered, but selling strangles against CFDs? And maybe I'm guessing this is probably not a tool that's in your arsenal.
No, it's not. But the first thing that comes to mind when I hear about this is portfolio margin. If you have a large enough, sizable enough account, or $125,000, you can kind of get the same thing with portfolio margin. Typically, it's depending on how aggressive the broker is, but you can usually buy stock 10 to 1 a lot of times, sometimes more in a portfolio margin account, and you can get a similar scenario. Now, in terms of the margin being favorable, yes, you have to pay the interest on the margin you borrow in portfolio margin, but you could set up a synthetic by selling a put unless you have an interactive broker's account, which we talked about on the show before, paying the position risk there. But the first thing that comes to my mind is just you could use portfolio margin. Now, it is an interesting concept, but with that, I think you could achieve something similar with the leverage scenarios that we already have available, doing traditional stock.
This kind of strikes me as a few years back when everyone kind of collectively discovered levered ETFs, and then before the brokers woke up to that fact, and so they were writing a ton of options on levered ETFs, and they were kind of just swinging for the fences and magnifying their risk exponentially, perhaps or perhaps not really understanding the true risk of what they were doing. I mean, this guy sounds savvy enough to if you get a CFD to begin with, and your account is sizable enough that your broker's going to be willing to create one of these contracts for you, you probably should be savvy enough to understand the risk you're taking on. But I'm always a little hesitant, reluctant to tell someone to go out there and take a levered instrument and add another levered instrument on top of it just for. He says it also mitigates your break even. I really have to check into that a little bit. I'm not sure how. I can see how it could certainly lower your cost basis 5% by 50%. That's a substantial savings. How it's going to improve your break even, maybe. I really have to take that claim with a little bit of an asterisk till I research it myself a bit. That said, you want to know how to mitigate your risk on the put leg. You're going to sell a put, so just sell a put spread instead if you're that concerned about it. That will keep you from blowing out on the downside, which is where, as we alluded to earlier, that's where you're not covered. That's where the actual risk is. We've talked before, I think, on our Advisors Option show and also our Option Bootcamp show, specifically about coverage, quote-unquote, covered strangles and things like that. So if you're interested in that strategy in particular, regardless of the CFD component, I encourage you to check out both of those shows. Do some searching on our website. You can find where we talked about strangles and things, and you'll see it for yourself. We went pretty much in-depth into those. Our friends over at the OIC had some good research on selling what they called effectively kind of like a covered combo, but the same kind of thing, where you're getting a little bit more long to the downside and how you plan that in, how that affects and how that strategy performs over time. So they have some good data on that. So check out those shows. If you're interested now, I'll dig a little bit too on these CFDs. You're the first person to really ask about these, so it might be worth looking to see exactly how that impacts your break even. But a good question nonetheless. You get a gold star for asking about those. All right, speaking of gold, Tucson, that's a good one for you. We got creatively named LJC6V. That rolls off the tongue. Asking here, is gold looking good for a collar here? Maybe 2 to 3 months out. Tusaw, you're not in the 2 to 3 month game, you're in the 2-year game, and it comes to silver, not gold. But what are your thoughts about putting on a gold collar here in the 2 to 3 month range?
I look at stuff like that very frequently. At this point in time, it's hard. I would say if you have a gain in place, I would consider it right now. But and by gain, you probably just someone who just got in maybe 2 or 3 weeks ago, I would definitely consider it. But right now, I guess I'm just too darn bullish on it, because in my silver collar, I'm just simply long silver and long the put for the 2-year time frame. I want to see it get a little bit higher before I start to work some more financing plays. But hey, I got 2 years to do it. I think hopefully I can get 40 cents paid for in the next 2 years, or a year and a half anyway. So I think that gold and silver are always good to collar just because of the reverse skew that exists within the options, meaning that if something bad happens, gold or silver typically go higher. So because of that, calls are typically priced higher than puts. And because of that, it oftentimes leads to better pricing for collars. So it's one of my favorite strategies. I've talked about collaring the metals on this show at least 6 trillion times. But right now, I guess I'm just too bullish.
You can't give it up. Can't give up that collar leg. It's actually this interesting question. We touched on this before on our TWIFO show a few times, because we obviously talk a lot about the skew out there in these products. That's a big focus of that show. But if you're interested in this, Mr. or Mrs. What was that handle there? LJC6V. Head on over to cmegroup.com/TWIFO, TWIFO. That's where you can get access to a lot of the analytics that we use for that show. And something in particular is interesting is the quick skew, and it'll show you how that skew is lining up, both the call wing and the put wing. That's what Uncle Mike was referring to earlier. I think we had a similar question on this show recently and went and dug into gold a little bit. I think gold has been more favorable in recent months than it is right now in terms of where the puts and calls are lining up. But the calls are still a little bit juicy, so you're always going to get some nice premium for those. And what do you want, obviously, in that environment is an environment where the puts are super cheap, so you can buy all the protection for nothing, and the calls are super juicy, so you can sell it and get paid all the live long day, and maybe you can get a credit for it. Right now, I don't know if gold is super premium in that range, but it's not bad. Certainly better than let's say an Apple or something like that might be. Mark, any thoughts on the metals?
Yeah, I was looking at gold, and gold looks like it's a little overbought. I would be looking to, that was one we were looking at as potential fade trade this morning, actually. So, silver, on the other hand, have not been playing with it as much. Clearly, if I had Mike's position, I would be all over it.
There you go. One talking up the gold and one fading the gold. So there you go. Maybe a little bit of a market to be made in between those two. We got more. All these crazy handles with people. Let's hold on to this one. This is a mouthful of acronyms, and it's a long question. Let's go to this one here. This comes from Tanzir. I like that handle. He or she asking, who's left in the broker world that's not been bought up? Any recommendations? That's an interesting question, because pretty much most of them have been quote unquote bought up over the past couple of years. Let's see. Option House got bought up. E-Trade cobbled them up. We saw Trade King get bought up last year by Ally. They're now Ally Invest. We saw, of course, a Scott Trade get sucked into the TD ecosystem over the past year as well. Going back a few years, of course, you had TD picking up TOS, you had Charles Schwab picking up Options Express. So I'm assuming he's asking about options-oriented brokers. Otherwise, why send it to us? And in terms of those, there's not many independent players left. There's only, the only ones that are really kind of still standalone are the one Mike referred to earlier, Interactive Brokers. Still a very good choice for if you're super high end, you know what you're doing, you don't need a lot of hand holding, you want to take advantage of their premium, margining in terms of very favorable treatment and very favorable fees, and Uncle Mike can maybe help you with that. He can probably speak to that in a little bit, as well as, of course, a pretty decent platform. Then that might be a good choice for you. The only other name I can think of that's active in the option space that's kind of independent are the Lightspeed folks, and they're very focused on options. Obviously, a much smaller player in the space, but they're out there. Other than those two, I'm hard pressed to think of any quote unquote independents that are option-centric that are still floating around out there. I don't know, Uncle Mike, you do a lot with IB. What are your thoughts here for our listener, Mr. or Mrs. Tanzir?
The only other one that I could think of would be Money Block /Trading Block. You
Ah, there
you
we
do
go.
have them,
I knew I was
but
forgetting
in the
one.
retail space, I couldn't think of any other ones that you did not mention.
Would you recommend Money Block or Trading Block for our listeners out there? You have any deals for them over there?
We don't have any special. I mean, we do. If that's one of they're one of the three brokers with which we work with. Typically, though, it depends on the person. So I would have no problem sending a client to Money Block. We do have probably a pretty decent percentage of our money that we have managed that we have under our books is at Money Block, or at least me personally anyway. So it just depends on what the person's looking for and what their needs are. So I would have no problem with it whatsoever on the retail side of it. It's like ice cream, whatever your preference is.
It seems like Money Block has kind of pivoted a bit. They're more in looking for guys like you, Mike, rather than the end user, and they kind of cater to you guys a little bit. Hence the Money Block versus the trade kind of pivoted more into that advisor audience. But yeah, they're not a bad idea. I'm surprised I left them off the list. Mr. Meatball, I know you do a lot with Lightspeed. Are they your rec? Or are you more IB? Or this guy obviously wants an independent with not much to choose from?
Well, did we mention Tradier? They've got a lot of different. They've got a lot of different front ends. They're definitely independent, relatively cheap to trade with. Check out there's an app they've got called Trade Hawks. That's interesting. That might be worth some time. But outside of that, that's it. I have not seen a lot. Oh, you've got don't the Tasty Trade people have a new?
That's true.
A new one.
That's true.
I
forgot
about that one.
Totally blanked on that one too. So there you go. There's another independent one. They used to kind of be very linked to TD, now kind of doing their own thing, obviously. So that they would qualify.
They would qualify as independent.
Yeah, so there you go. They would qualify as independent. So there you go, Mr. Tan or Mrs. Tanzir. A few recs for you. I haven't played out there with the Tradier one. I know they're kind of an interesting player. Not totally option centric, but they do play in that space, and they obviously are going for the more kind of low front end, kind of just all API. So if you're a little bit more tech savvy, then maybe Tradier. Maybe a cool one for you. All right, let's see. Uncle Mike getting some love in the questions here today. This one comes in from Vic. Vic wants to know, what's Tucson up to in Apple right now? So tell us, Uncle Mike, what are you up to? Vic wants to know in Apple.
I just happened to sell a 164 covered call on Apple today.
Look at you slinging the Apple again. What happened?
Well, it's part of the triple income strategy. So we actually, this past month, the rule that we have on Apple right now is that we're trying, not rule, I should say, but what we're doing with Apple right now is we're long Apple, just selling some out of the money calls at this point. I still can't justify going totally all in as I did in episodes 100 through 250 or whatever it was. But we do have it as a position, and just selling some out of the money calls on it. You can get close to between 0.5% to 1% a month. And by being out of the money on it, it's a nice little way to have a higher quality stock, get a little bit of income on it. And it goes up every now and then too, which makes it even more fun.
Except for today when it's up 0.1% or down 0.1%, and then you cry softly. So there you go, Vic. That's what Tucson's up to in Apple right now. I don't know, Mr. Meatball, your hardcores in your pit chat, are they still as Apple heavy as they used to be, or have they moved on to like the Netflixes, the Teslas and stuff?
Well, I mean, they still trade a lot. Apple's been a little range bound. We actually spent today looking at an Apple Iron Condor, one I kind of liked, and Mike, you might like this. The September 1st, this was this morning. So vol was a little higher, but I was looking at the September 1st, 150, 148, 162.5, 165, Iron Condor collecting 60 cents. Then that was the expiring September 1st. So it was a 10-day trade, and I'm getting a pretty decent ROI.
Yeah, I like condors like that you can get a pretty decent chunk of premium on without a lot of risk. I don't know if because we have a bullish stance on Apple, I wouldn't do that trade. But overall, I think that that risk reward is very handsome.
Ooh, handsome risk reward, says the man. I like that. I like some handsome risk reward in my day. All right, since we're talking strategies, we'll wrap it up on this question. This comes from Fairmax. Since Mark invoked the Iron Condor, we have to do this question now. He says, what option strategies do you use the most? Obviously, this is a question we could probably spend many, many days on because we extol a lot of them here. But I've gone on the record before in the past with my love for a couple of strategies. I love the old iron fly. I'm not a iron door guy. I've always been more of a fly guy. I figure, what's the old saying? I think, what did Don Schlesinger say many years ago? The iron condor is an iron fly for cowards. I've always liked that saying. He's full of a few of them. That's one of his better ones. And also, I like the old bullish risk averse. Sometimes it's a question. I fight with the rock lobster sometimes about, do I want to buy that call leg or not? And we go back and forth sometimes, which is fun. He's not a fan of buying the call leg until the underlying moves. I get it. So sometimes maybe it starts off just a short put with the intent to become a bullish risk reversal if things move. But I like those two. Those kind of probably if I had to pick my go-tos a lot, those are those two. Those are just a pure options trades. If you're talking like something in a long-term account, maybe a covered call, those are kind of basic. Those are underlying type trades. I don't talk about those. Let's talk pure options. Mr. Uncle Mike, would you say it's probably your kind of de facto collar position you set up, or would it be something else?
Well, this argument is kind of like in the football world, people say, if I could just do one lift in the weight room, I would do the squat, I would do the clean, I would do the bench press or whatever. And so my response to that is I would never want to do just one lift. So I guess my response to this question would be I'd be scared to death to trade if I could only do one strategy, just because of the fact that if the strategy's not there, if the premium stars aren't aligned, so to speak, they won't work. So that's what I would say. But I mean, if I had to pick one, I would want to say just a good old fashioned vertical call spread, because by doing that, you can have bullish exposure to the market. You can make adjustments on if it goes up or goes down. You can scalp the short leg in some way, shape, or form. But if I had to pick one, it probably would be that. But in reality, the collar is kind of similar to that on a synthetic standpoint anyway. So if I had to pick one, I would go with the bullish call spread. Now, is that the one I most frequently use? Probably not. Most of the money that I have under management is probably that's with option strategies, as with the collar, just because of the fact that it's not leveraged. But I would say I'm kind of a collar call spread kind of guy, I guess.
Yeah, he's asking which ones you use the most. So I kind of figure you're in just by de facto, you kind of have to be, I would think, at least 60% has got to be in. How much of what you do is your protective puts and how you pay for them. So collars with kickers, maybe other short puts or, other kind of diagonals and things you're doing. But I'd have to lump you probably, if I had to guess, in the collar camp. Sound like I'm correct. Mr. Meatball. Yeah, Mr. Meatball. I got it right that time. Mr. Meatball, you're doing a lot of crazy stuff over there in Carmen line. If there's one go-to you use the most, what would it be?
I do a lot of straight option trading, just buy call, buy put. And I do a lot of call spreads and ratio spreads. Those are really kind of the main crux of what I do.
Are you a buy one, sell two kind of guy, or a sell one, buy two kind of VIX kind of guy?
I am a buy one, sell two if I can, most of the time. I love those bare 1x2s for credit. Those are fun.
Of course, if you can buy one and sell two, you gotta love buying one and like selling six, right? I mean, that's how it goes.
Oh yeah,
right?
Well, how can I lose?
How can you lose? How can you lose on that setup? All right. On that note, good questions, everybody. You guys really come out of left field. I love it. Good questions. Now it's time to roll on to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. You guys have been asking for an extended question segment, extended mail block. You got it. You can stop hitting me up. You keep sending the questions, though. We love them. We'll get to as many as we can, but not every day do we have as much time as we had today. So a little bit of a bonus for all you fun listeners out there. All right. This is, of course, Around the Block, the portion of the show where we peer into the future. A lot of question marks lurking in that misty ether of the future these days. You got what's going to happen, over there. Obviously, we have the big announcement / speech tonight. We have, what's going on. Will they, won't they dance with Korea? The ongoing brouhaha here domestically. We still have some small earnings popping off as well, and some other things to keep an eye on. So a lot of stuff in the old stew, in the old cauldron to keep an eye on this week. Let's start with you, Uncle Mike. Which of those ingredients are you focusing on the most this week?
I think if you could just look at the Donald Trump's Twitter account, combine that with your screen of the S&P futures, if you have those two tools, you'll know what's going on in the world. What more do you need in this market?
Yeah, I guess you're right. Just follow his Twitter account and brace for the morning tweet storm, and you're kind of good to go. Mr. Meatball, do you concur, or you got something else to add to our increasingly volatile stew?
I mean, I think we've got to see what's going to happen tomorrow now that the eclipse is over and it's a Monday. You know, will we continue to be uncorrelated to eclipses tomorrow? We shall see. And yeah, I think tonight's speech is going to be interesting, but I think the follow-up presser is really the one that's going to be more interesting.
Speaking of things that are interesting, that music is interesting. It means we come to the end of this epic journey through the world of options. A fun one, a quiet day, but we got a chance to chat with a lot of you guys and answer a lot of your questions, which we always love. Maybe we'll put together an all question and answer show one day just for the fun of it. Maybe we'll have an all Q&A show on the network. Who knows? So we got a lot of questions, so it might be kind of fun. And you guys ask weird stuff like CFDs and all kinds of other fun stuff, which is always fun, keeps us on our toes. But before we go, let's go around the horn again one last time. Let's go in reverse order. Let's start with the meatball. Mr. Meatball, I know you got something big cooking coming down the pike. What can we look forward to from the pit coming up, sir?
Yeah, well, we've got our summit coming up at the end of September. Mark has a link. He can post in the show notes. $297. How do you lose? You get to see me, get to see Mark, get to see all sorts of other speakers. It'll be great.
I don't know what you're talking about. I don't know what link you're talking about. I don't know what you're saying. I don't know. This is all lies, listeners. First I'm hearing about it. No, of course, he's talking about his Professional Traders Summit. If you don't follow Mark for some reason, but you follow us, hit us up. We have the link. We tweet it out there, put it in the show notes. We put it in our newsletter, all sorts of fun stuff. A lot of ways you can click on that link. If you're going to be in Chicago in mid to late September, then you too can join us for some fun. Maybe see a live taping of a show or two. All sorts of fun stuff. And last but not least, Mr. Uncle Mike, when you're not out there saving people big bucks on their ticket charges, what else you got cooking up for them?
Well, if you want to work with a financial advisor that's not afraid of the word rho and theta, feel free to contact me. I'm happy to work with anyone if you have $50 a month to invest, or if you have $75 million to invest. $76 million is too much for me, though. Feel free to contact me at 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
So there you go, listeners. He's in that, let's say, $200 to $75 million range. If you fall in that range, you too can hire Uncle Mike Tusa. It's like the old A-team. If you can find them, then maybe he can help you over there. Uncle Mike Tusa, hit him up, mtusa@rcmfs.com to learn more. On behalf of Uncle Mike and I almost did it, but I caught myself, and the Meatball, these are our A-team, and indeed myself. I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing, all the other fun stuff you do, hitting us up with crazy questions. We love them. Keep them coming, and we'll see you on Thursday for more of The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.